today's episode, I want to go over why today could possibly be the first day of the new bear market. Welcome back to FlexCandle, where we read the candles and flex the moves. Let's get into it, guys. Right now, the price of Bitcoin is currently at $93,730. It's about 4:30 p.m. Eastern time, and we start off here with the weekly chart. We see that the stochastics RSI still are rolling over. The RSI is rolling over. We have lost the 50 moving average, which to me is the main indicator whether you're still in the bull run or not. And we close this candle in about 2 hours and 24 minutes, and I don't think that within that time we're going to be able to get it back above 103k. We're going to have to make basically a $10,000 move in 2 hours and a half unless some crazy news comes out. I don't really think that that's going to happen. You guys already know I've been preaching that once we lose the 50 moving average with a candle or two, there is possibly the beginning of the bear market, and that's what I'm going to stick with until I'm proven otherwise. Now, the reason I'm saying that is, let's go back to the past bull market here, and as you can see back in 2020, once we got above the 50 moving average, this is when we hit 63k for the first time. Then we came down to test the 50 moving average for the first time. We wicked down below, but it's not a wick, it would have to be a candle below the 50 moving average for us to go into the bear market, and we stay above it again. Then we wick below, and all of a sudden we got a green candle. This is where we pop back up to 69k. I compare this to this part here where we made it to 112, and then we tested the 50 moving average here when we went down to 74k back in like March or April, and then from there we popped back up, and as you can see, we made it all the way to 126. But now look, we fell below the 50 moving average. Now let's see what happened the last bull market. Once we lost the 50 moving average, which was approximately here in December 2021, we went down to the 80 moving average. We came back up to test the 50 moving average, which was now resistance, not support, and then we lost it. And ever since then, we were in a bear market where we fell down to 16k. Many people didn't think it would ever go below 20, and then we started the bull market of this time around where we made it all the way back up to 74k. We came back down, we tested the 50 moving average over here like around 48k. We didn't lose it though. We came back up, we hit 112, we came back down, tested 74k. We never lost it with a candle, just wicks, and as you can see, then we made it all the way back up to 126, which is the all-time high, and now all of a sudden we're losing the 50 moving average. So if we go based on what happened in the last bull market, once we lost that 50 moving average, it was the bear market. So that's why I believe that us losing this 50 moving average today is the first day of the bear market. Now we could get a relief rally where next week we have a green engulfing candle. All of a sudden those are tweezer bottoms. Maybe we stay above the 50 moving average barely, and then eventually we'll probably end up falling down. I'll be interested to see where the price is once this fully resets, and to see if we can make it all the way back up, because we could make it up here and then roll over again just like we did here. We could be here for a while. Now the next logical move would be us going to this 80 moving average at 89,542. I think once we hit there, we might get some type of bounce up, but it might just be to test the 50 moving average. Let's see what ends up happening. So right now I have to declare that I'm 90% sure for me and what I'm doing that this could be the bear market. I would like to see 2 more candles to get 100%. Anything could happen. We could get a God candle tomorrow, flex candle. All of a sudden we're back at 126 with some crazy news. I feel like since Wall Street took over the ETFs and they got involved with crypto, that they've been messing around with the timeline and the cycle a little bit. October 6th seems to have been the top. That kind of correlates with the 4-year cycle based on the days of the bull market, how many days it runs and stuff like that. So everything's correlating that the 4-year cycle is still intact. You know, let's see what ends up happening, but probability right now is on the side that the bear market is pretty much here. Now we head over to the other time frames. The 6th day, you can still see is rolling over. We're already starting to lose the 80 moving average. We head over to the 4th day, it's rolling over as well. We already lost the 100 moving average. This looks like it wants to go to the 200 moving average. That's at 76k, so it's possible that we get all the way down there. If we head over to the 3-day chart, stochastics still have to reset. This wants to go to the 200 moving average. That's at 87k. This looks like what's probable. I'm assuming we're going to get some type of bounce from here, but is this going to be from, you know, this 200 moving average maybe back to this 100 moving average? Maybe we break 100k again, but we don't go into the high 100ks. From there, maybe we fall back down. We head over to the daily chart. Look at this. We went halfway up the stochastics, we lost it, and now we're starting to reset. We're very far away from this 200 moving average. That's at 110. The 21 moving average is basically at 104. This is where I have the bear flag and the head and shoulder pattern, basically with the measure move taking us to about 90,600. We're already there. We don't have much to go to fulfill this measured move here, and for me this is already a winning trade. You know, anything could happen. We could go back up up, relief rally, dead cat bounce, and then ultimately continue to fall down. Now, on the other time frames, the 22-hour time frame, we have some bullish divergence here. We're getting far away from the 21 moving average. That's at 100,800. We're kind of resetting. Maybe we can make a move back up, but are we going to get past the 21 moving average? That's the thing. Look at this. We made it above the 21 moving average, then we got rejected. But we get rejected here again. On the 8-hour chart, stochastics are rolling over. This is showing me that we're still going to get more downside. On the 4-hour chart, we're on the way down on the stochastics. No strength whatsoever here on the 4-hour chart. You guys know I cannot get bullish at all until we get above this 200 moving average on the 4-hour. That's at 106.8. That seems crazy far away. Maybe we're setting up some type of inverted head and shoulder. We're making the head now, but I mean, we would have to make it all the way back up to 105 around there for this to even be a possibility. That seems far-fetched. The 1-hour chart is starting to reset, but we're not even above the 21 moving average. And on the 15-minute chart, we're rolling over here. We lost the 21 moving average. So it just looks like the next logical thing to happen would be for us to head down to this 3-day 200 moving average at 87,951. Hopefully from there we get some type of a bounce, but this is where I think we're going to go. I definitely think we're going to finish off this bear flag, this head and shoulder pattern that we have here, and let's see if we get some type of a bounce there. But to me, I would have to say if we close in the next 2 hours and 15 minutes below the 50 moving average, I would have to say with 90% certainty for me, for what I'm doing, that we are beginning the bear market. Now, this doesn't mean we're going to go into a 1.5-year bear market, 2-year bear market. Maybe they're messing with the timeline. Maybe we just go into a bear market until May. Jerome Powell leaves, they change him, and then all of a sudden they cut the rates, things get bullish, who knows what happens. But we're going to some type of a bear market, whether it's 3 months, 6 months, 7 months, a year, 2 years, 3 years. What I feel like is that at least we're going to see lower prices for the at least short to medium term. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.